Well, good evening and welcome to this live stream event on the 4th of January 2022. Martin North from Digital Finance Analytics here. Great to have you on the show tonight, and thanks very much for taking some time out of your Tuesday evening to spend it with us. It's great to see you. Well, there's a lot we're going to talk about tonight, but just as I always do before I bring Tony in, let me just remind you that we don't provide specific financial or legal advice on this channel. This is just a general conversation. We do moderate the chat, so please do play nice in the chat room. This is as at the 4th of January 2022 if you're watching this in replay. If you'd like to ask a question, use @WalkTheWorld to make sure that you get my attention. I've also enabled Super Chat, which means that you can ensure your question gets to the top of the list, or indeed if you'd like to make a contribution to what we do around here, that would be greatly appreciated, and I'd like to thank those already who've made contributions this evening. It is really greatly appreciated. Anyway, without further ado, let me now bring Tony Locantro in. Tony, are you there?
Oh, most certainly, Martin, and Happy New Year to DFA viewers. You will notice my slightly toned down background. That's because I'm in my new home, which people probably can't believe I bought, but I had to convert some of those zeros to a family home, and I do have 2 plants in the background. But, oh, look, I love being here. Your community is fantastic, and let's bring it on.
Absolutely. Well, there's so much we're going to talk about tonight, and I know that you've got a few slides that we'll get into quite quickly, because, of course, people are here from all sorts of reasons, but one of them is because of your particular interest in the small caps and some of the things that you've been looking at. And but generally, you know, the markets this year, they've been pretty good, haven't they? I mean, one of the strongest years, well, for the last 20 years plus.
Amazing market. And one of the hardest things to do in speculation is to bet against stupid money. Stupid money can just keep coming. We have, you know, these rollicking markets, property, the ASX, even though there's some threats coming. But what I'm starting to worry about is complacency starting to set in. And complacency is the biggest killer in financial markets, and that's going to have a devastating impact. So, yeah, 2001 for me was one of the toughest years of my career. I've been a small cap advisor for 23 years. Yeah, we had a couple of 10 baggers, 5 to 9. My uranium stocks went ape shit. But I see it as a transformative year. But, you know, I'm like AC/DC or the Wiggles, apart from the yellow skivvy leaving. I stick to my knitting and I don't join the stupid money. I sleep at night. I'm probably old school now. But as they say, Martin, music always reverts to guitar, bass and drums.
Yeah, the same old themes come back and again, don't they, at the end of the day?
Yeah, I mean, Warren Buffett isn't a dinosaur. Elon Musk isn't the future. So anyway, hopefully people have got those bingo cards out, because I'll probably delivered a few bingos shortly.
Well, I look forward to that. And, you know, you've got a reputation to keep up, Tony, in terms of making sure that you tick them all off, right? I've got my list here. I'll tell you at the end whether you missed any. Anyway, do you want to go ahead with your presentation, and I'll give you control?
Oh, absolutely. And what I try and do with these presentations is don't hold back. I've got no fear. So anyway, for those wondering, I actually passed my fascia exam. It was the worst 3.5 hours of my life, besides my daughter's ballet concert. So you'll hear about that later. But anyway, let's try and share. Are we working, Martin?
Yeah, we're all working, Tony, and I've put you a mini U down the bottom of the corner there so people can also see you at the same time.
Awesome. So anyway, I'm going to run through my top stocks for this year. I'm going to give a property and economic outlook as well. There is my email address. I am quiet probably for the next 4 weeks. So if anyone wants to become a client, that's fine if they want to have a chat. But really, I've got enough clients, and how much money can you have, or how many yachts can you water ski behind? So anyway, So there's my disclaimer. So, this pretty much is just information I feel is real. It's what I believe in. This is not financial advice whatsoever. So pretty much everyone should go and see their financial advisor, or the worst thing you can do is ask your wife, or if you're a brilliant female investor, which a lot of them are, ask your husband. So anyway, read that at your own discretion. But what I hide behind is a disclaimer, because it isn't illegal to be a shit stock picker. Well, anyway, I'm going to bring on some stocks. So anyway, that's what every asset class looks like at the moment. I have no fear in saying to my partner that I really like the one on the far left. These women now would be grandmothers. So anyway, that's what, at the top of a market, that's what every asset class looks like. That's what every house in East Broken Hill appears to be. That's what every crypto or bandwagon stock. So anyway, that's what you get. Everything's priced for perfection. But in reality, assets are like that pot. They're easy to get into and they're very hard to get out of, especially assets such as property, where you've got all these costs. You've got to deal with real estate agents, settlements, loans, you name it. And then you've got to pay stamp as well. And markets can get fairly illiquid. But I've just been through the process of selling 2 properties and buying 1. And to be honest, I don't want to be a property investor. I want to be in the stock market, where you can pretty much get an instant sale. But, apart from days like when the NASDAQ died, that was crickets. So what happens when markets turn? Everyone goes off a cliff. And once that sentiment really shifts, it gets very ugly. And I think that is certainly what is coming. And, assets people like and put forward to family members, suddenly they'll go quiet. And what I've found is that slide is relevant to some of my favourite stocks, which I'll get to shortly. So anyway, I'm about to declare my stock of the year. I should disclose to viewers that I'm as full as a selective state school, and they're pretty full these days. I hold approximately 819,000 shares. My last lot of stock I paid 23 cents for on market. And my stock of the year for this year, is Narada. Now, Narada are working towards a cholesterol inhibitor that in preclinical studies on an engineered mice model has already smacked Lipitor into the next postcode. And they are also working towards a phase 1 trial in traumatic brain injury and stroke with the Walter Reed Military Institute in the US. So this is really serious stuff. The stock has been absolutely poleaxed, mainly due to boredom. And so what happens is a company just does what they set out, albeit, there've been a few delays, but they're doing what they can. And people get addicted to rubbish. They want instant gratification. People sell for a variety of reasons. They wake up in a bad mood. They get divorced, which is normally the killer. That's the easiest way to lose 80% of your wealth. And as I say to people, the 3 most expensive words in history are "I love you," and the 4 most words in history are "this time is different," which I'll get onto shortly. So pretty much I've bought a lot of this stock on market. I was involved in the IPO, and viewers should have a look at a company called Argenica, which Alto Capital floated. I didn't get involved in it really, but that now has gone from under 20 cents into the 80s. So that is my stock of the year. And what I've done is I like to cut and paste photos. That's what I spend most of my life doing. But you're welcome to take a screenshot of that. There are the logos of the companies. I'm pretty much putting my career on the line with, which I do so every year. So there is my list of top stocks for this year called the Elegant 18. It was the sensational 17, and actually my late inclusion, which I'll get to shortly, has already risen 50%. Now, these are the share prices I put up when I release this list to my clients. They pay me, so I release this list to them, and then I'll release it publicly. Some people say, well, some of the share prices have moved, but my clients have got to have some advantage because that they keep me doing these Zooms and enjoying life. But let's look at a few of them. Adulta has been the red-headed stepchild of my portfolio. They now have got their shit together. They have a drug called AD214, which is looking at fibrosis of the lungs, and the drug went to the liver, so it crapped itself basically. But now the inhalation method means that stock has turned around. So I think that could have a huge year. I'm increasing my holding. Uranium are buying the Sandstone project off Middle Island. This management team worked under Bill Beeman at Northern Star, and it's often the first acquisition which sets your share price racing. So that's one to watch. You can actually buy that below that price. Ultiman is an emerging zinc producer in northern Italy. Great management. Zinc's unloved, but it is going to be a clean concentrate. Alchemy is a gold explorer, which is the breakup value is higher. Then I'll look at a company like Copper Search. Now, these are the Powerball type of stocks. They've got 10 massive projects in the Gawler Craton. And these are the type of stocks where you're either going to halve your money or you're going to make 5, 10, 20, 50 times if they have a discovery. So they've already had a little bit of a run. I helped float them. These guys came from the $2 billion takeover of Extract Resources. E79, I'm backing for Chris Cairns. I've been involved with Chris for coming up to 18 years now. He has never let me down through Integra and the subsequent takeover and a 40% copper hit from Staveley, which converted some of my clients' wealth into six figures. Exafarm, I helped float. It is the biggest position I'm holding. I'm beyond full, but they have got their US patent on exosomes, and hopefully exosomes will be the next big thing. If that really catches on, that thing will run like a Kenyan. That's probably 12 bingo ticked off already. Godolphin is the red-headed stepchild's twin. That stock has let me down, but they're certainly undervalued. Metalbank, have a look at management. Ines Scotland has created the most wealth of any female company director, I guess until Gaines come along in Fortescue. Mako, African Gold, Cote d'Ivoire, the less shitty country of a pretty crappy continent, but that looks great. M3 Mining hit 40 cents today. We're up about 50% already, which is awesome. They went up on no news. They're looking for copper. Pac Gold, potentially a couple of million ounces if everything goes right in North Queensland. Proteomics is an interesting stock. They've developed a diagnostic pro-marker D test that predicts diabetic kidney disease years before it happens. This has actually been backdated with Janssen to show that it works. And now the science is proven that's simply a rollout exercise now. So I raised their money at 20 cents, 28 cents. They're currently $1.13, but they still hit my model of 4 to 5 times upside if everything goes right. Radio Farm was one of the worst ASX floats in 2021. I could not believe what happened to the 60-cent IPO. I kind of have a pool room here at the moment. So what I do is I like to buy stocks at the bottom and then frame the contract note, and that goes straight to the pool room. But I got pretty angry at the sellers. And before I realised it, I'd spent about $180,000 buying this stock, but I did pick up some at 29 cents. In conjunction with Chimeric, Paul Hopper is right behind this company. Paul was in Viralytics and Imugene, and he's created a lot of wealth in the biotech sector. And I'm expecting this stock to try and replicate what Telix has done. Telix listed at 60 cents, fell immediately, and then went $7, $8 pretty quickly. So again, they're in diagnostics. They are focused on cancer. And I think that's really a company of the future. The managing director is Italian, so he's actually hard to understand. But I'm also Italian, but I'm known as the token Italian. Red metal is the bane of my friggin' existence. No other stocks generate as much hatred on internet forums than this stock. But as a chart coming up shortly will show, I'm hoping to have the last laugh. But they're a lead silver company. They do have a joint venture with Oz Minerals, so they do have those Powerball targets. Westar is part of the red-headed stepchild triplets. I topped up at 12 cents. They're currently trading in the 9s, but it doesn't really matter because some of these companies, before they hit the big discovery, look absolutely sick. And that extends to Minotaur 21 years ago, Sirius, which went 5.7 cents to $5, Sandfire, which went 5.7 cents to $10. These discoveries can happen in the worst markets. But what I'd like to show is that's a long-term chart of red metal. They have been listed coming up to 18 years. And as you can see, these stocks are quite volatile. And what they do is when you've got great management, they're never going to let you down. So you can see the spikes. You can see between 2015, 2016, the stock hit 3.1 cents, and that was the time to load up. So this company has great management, great projects. They have 100 million ounces of silver. Admittedly, it's a lead resource, but once the enthusiasm comes back for silver, I think this stock could do great things. My clients and I hold approximately 10% of the company, and it's a sleeper. But, if this spends another couple of years flat, then we'll continue to build with profits. And I have to reiterate to people that this speculation is a long game. You have to have the confidence to go in to build large holdings. My clients found out last year with Eagle Mountain. Some of them found out the hard way because the 10 times rise happened within the 12 months. And some of them looked for the capital gains tax discount, and the stock got sliced in two. So it is a long game. You have to know the cycles of a junior explorer. I can give you the stocks to watch, but you need to learn how these stocks trade. You just can't buy all the companies I've listed, then stick your head in the sand, because small stocks are reactive, and you need to know that you could make, 5, 6, 7 times your money in between before you hit the Powerball. And sometimes you've got to invest $5,000, $10,000 a year, just like some of the average lotto players, to end up striking the big one. Now, I'm going to move on to commodities now, precious metals. I believe that silver is the best investment on the market for those looking to protect their wealth or certainly grow it. Silver price is down to $22.81. I still think that the market is that tight that it does have the capacity to come in for some manipulation. I didn't mean that word. I meant genuine buying. And the gold price, hovering around 1,800. But I still believe that the best ways now to create long-term wealth is to dollar cost average gold and silver, and price weakness is your friend because you get to buy more. And I sent out a text to my 3 kids telling them there's a total gift ban. I'm not going to put money in your account or buy you crap you don't need. I'm going to dollar cost average silver for you. Every month, money's going to come out of my account and you're going to start to own some silver. And then in 10 years' time, you're going to be able to buy something else, or maybe go and blow it on a sports car or whatever. But to me, if I had my time again, that's what I'd be doing instead of pissing my money up a wall, buying things to impress people I don't like anyway. So I'm going to call silver the best asset class from now. And I remember the days when it was in the $4 mark and Buffett was selling and Kodak was going to digital photography, and everyone said, look, this is the death of silver. Now, it is a currency exercise as well. So I put some figures there below. If the Aussie dollar gets to 80 cents, well, obviously the silver price is going to drop. I've been quite conservative there because I'm expecting once silver starts to run, we're going to see some pretty insane prices. So for me, instead of going into financial stocks, dollar cost averaging to the likes of BHP and Rio, why not back something that's been around for over 5,000 years, that isn't going to die, that's going to provide you with the volatility to create some long-term wealth? So that's my view there. Platinum, if there were quintuplets, platinum would be certainly, he'd be dressed in his Amish uniform as well. Platinum has been an absolute dog. And it's funny how you look at your old frequent flyer cards and, platinum was the top of the Virgin frequent flyer. Now, platinum's under $1,000 an ounce. And what could really drive platinum is once we see car manufacturers start to alleviate this chip shortage, and we might start to see some upside potential, albeit muted. So there's limited platinum opportunities. I think you should go and have a look at them. You might also like to look at some ETFs, but again, probably not going to set the world on fire with those investments. Now, one sector that really stunned me last year was uranium. We were backing Bannerman, 3 cents, days of our livestock, and then suddenly the thing 10 times. So, I mean, for uranium stocks, I go back to the 2005, 2006 bubble. Well, there were hardly any companies, and then suddenly there's 150 plus. And the worst thing you can do with the uranium deposit is try and mine the bloody stuff. But, the Sprott Fund got hearts racing. A lot of these stocks were then priced for perfection. I thought it was a bit of a blip to the upside. So I got my clients to take profits. Actually, one of my clients, it was the only stock I put him in, and he complained all the way to taking his 9 times. So these stocks can surprise to the upside. But you have to remember that the 1998 uranium bubble didn't come to 2005. It's a bit like waiting for a Guns N' Roses concert and hoping Axl shows up. Lithium's an interesting one. It's got all the hype. We've seen the stocks recover from a nasty crash in January the 15th, 2018. But I go back. I actually got involved in the first lithium bubble in 2008, where you could buy all the Orocobre you wanted at 15 cents. Your only other choice was Galaxy. I went for Orocobre, which is now AKE, which is trading over $11. And this was 13 years ago. So some of these sectors aren't going to rally straight away, and you have to have the fortitude to hold on. But I think platinum certainly has been smashed around. Palladium was extremely unpopular, like some other things ending in IUM, so certainly worth a look. But I retain the faith in good old gold and silver. Boring, but I'll always go back to in 1971, 700 ounces of gold was able to buy you a house at 3 to 4 times price income. These days, you could buy a 2-bedroom weatherboard in Campsie or further west for the same amount of money with your 700 ounces of gold. And, you're only paying 14, 15 times earnings. But, this time is different, guys. So, why would you pay 3 to 4 when you can happily pay 15 times? So what has really got me is there's Barnaby the Black Swan. And Barnaby's been swimming to your house. These are people that own a house in Sydney or Melbourne that might have painted a wall or put up a back deck or gone to Bunnings on a Saturday for the sausage sizzle. And what Barnaby the Black Swan has delivered to most of the population in those cities is a shared Saturday lotto win. Now, who would have thought the best investment was sitting on your backside doing bugger all? So, this Black Swan has delivered a hell of a lot of paper wealth to all of it. And I can assure people that the smart ones will take it, get themselves out of debt, and have the financial freedom when they're shopping at Woolies or Coles to throw in smoked salmon and some caviar and maybe invest in some barramundi. But who would have predicted COVID? I'll get to that a little bit further on. But in life, let's be honest, life isn't meant to be as easy as it has been. There's Red from one of my favourite movies, The Shawshank. He had to go through prison to get to that beautiful island. Homeowners and investors throughout the years have had to do the Andy Dufresne and crawl their way through chocolate syrup to get out of jail. And what the end financial result will be, just to add to the bingo list, is Cam Bancroft there making sure that he's still in possession of it. So, that's reality. Life and investment is not easy. Barnaby the Black Swan isn't going to be around forever. So the biggest threats to all these assets are higher interest rates, which is, you only got to look at New Zealand, 0.75, and some of the Kiwis are now paying 5.89% on a mortgage. I was fortunate. I managed to lock in 5 years with the ANZ. I actually took the rate lock punt and have got 2.64%. So I will start to panic in year 4, maybe. But hopefully I can pay off a bit of my debt. Lowering expectations. A lot of first home buyers are going to give up. Others in the market will start to turn against it. And the cheerleaders will become a dying breed. Now, I just think the whole aspect of Australia and the world economy is that an economic shitstorm will arrive. And I had to look at a slide, and there's a slide relative, a book to the Labor government, which I think are going to come into power. Now, it was interesting that even though I've just completed my FASIA exam, that Labor said financial advisors with 10 years plus shouldn't have to do a degree. And I thought, well, shit, there's 25 to 30 grand of my life saved along with 2 years. But just like Harvey Norman or JB Hi-Fi price match, ScoMo and the Liberals have come in and promised us a similar deal. So now it becomes Coke, Pepsi, Virgin, Qantas. So I still think we've got an economic shitstorm on the way. And my prediction is Labor will win the election. And it's the poison chalice. I just think things are going to get extremely tough in Australia because we've had these massive asset price increases, cheap money. Our youth have become addicted on buy now, pay later schemes, and regulators are going to come in. You've got a lot of young people now trading cryptocurrencies on their mobile phones, and a lot of these speculators aren't going to make their way to providing funds to real businesses to grow. So the other major risk, I stole that slide from you, Martin, is the bank of mum and dad, where I think that we're now faced with average loans of about $90,000. And the bank of mum and dad has become the 9th largest financial institution in the country. And, you look at the average deposit, just say $150,000. How can a young couple ever save that with the cost of living? The books are cooked. They've gone to mum and dad. They've got guarantors. Now, it's a house of cards now. Does mum and dad call in that debt? Because you can promise the world, you can say, look, I'm going to pay you back, Dad, but as sure as hell you're not. And I think that once we start to see prices slide, then there's going to be pressure on the parents to start to raise that money. They'll be entering retirement. They want their financial security. So the bank of mum and dad is a massive threat. And I think that's going to play out once we see prices start to normalise. So let's have a look at the home value index relative to wages. And, those charts are just totally out of kilter. There's been SFA in wages growth. They've been pretty much stagnant. But look at that home value index. And those that haven't watched The Big Short 40 times, go back and hear what Christian Bale says early. It's all debt. And that's going to end in tears. And you look at price to income ratios. I know when my parents bought a unit in Manly Vale, Dad paid 3 to 4 times his income. I will harp on this story. Once I got out of police academy, they put me in the terrible suburb of Bondi. And I actually managed to buy a 1-bedroom unit, 500 metres from the beach, close to the chicken burger place that became a Porto. And I paid 2.4 times my police income. I could get in a wetsuit, walk to the beach, get some waves, come back, get in my police uniform and walk to work. And these were the days when Bondi was a desirable suburb. There wasn't a Chemist Warehouse in sight. You could actually buy avocado on toast. You could avoid deconstructed Vegemite sandwiches. And the waves were uncrowded. Now we've had a proliferation in social unrest. We've had the epidemic of drugs, and it's overcrowded. So I don't see why you should pay 10 times relative to wages to live there. And I used to surf Curl in the late 80s, and Curl Harbord were regarded as rough areas. And suddenly, if you look at Struggle Street, Mount Druitt, they're suddenly blue chip. And before those get on the comment section and say that I'm putting down working class people, well, that's a load of crap, because a lot of my last couple of years I've spent in some of the lowest house price areas in Perth. I've been travelling to and from those suburbs, enjoying the 30-kilometre trek. And, it's just hard to see those areas become blue chip like what's happened to suburbs in Sydney like East Dubbo and East Uluru. So I just think the world has gone batshit crazy. Everything is out of kilter. Now, viewers will realise that Martin North turned down the bet with Stephen Koukoulas. I took it, $2,500 at 6 to 1. And it looked as though I was going to breeze in once Sydney and Melbourne house prices fell around 10%. Then suddenly Barnaby, the black swan, swam to town. and prices have gone up the opposite, gone up in the opposite way. Luckily, what's happened in COVID is it has increased my business. I have got a lot of clients now, a lot more people trading from home, working from home. So the $2,500 haircut I'm about to cop in a couple of weeks isn't going to feel so bad. But who would have predicted? I don't think I read any almanac or any psychic that predicted we'd end up with a global pandemic than more variants of toothbrushes and handheld razors. So anyway, I put that slide up because I didn't pick South Sydney to win the premiership, but I just like that slide. I actually got permission from my partner to put that slide up. So no offence to anyone. And here are some of my predictions, guys. In the AFL, if Brisbane can get a fit side on the ground, I think they'll win the premiership this year. I actually got to the AFL Grand Final and Melbourne just looked scintillating. Petrarca, Oliver, just through that midfield. But I just think Brisbane are due. Fitness and injuries are going to be the key. I think Melbourne can return in the NRL. I think Sydney Roosters have had a really bad time with injuries, so I'm predicting Melbourne. Floating artists to win the Melbourne Cup if the horse runs, so that's a long way out. I know Stephen Koukoulis is into horse racing. Maybe he could come up with the winner for me. But you've got to realise that if you go on a sports bet, sometimes you can do all you do if the horse doesn't run. Well, no shit, Sherlock. I think the RBA cash rate is going to go up from 0.1% up to 0.5%. We might even start heading towards the Kiwis. Suddenly, variable interest rates are 4% plus. So put that into an $800,000 mortgage on an asset dropping 20, 30%, and you're doing the Cam Bancroft. ASX 200, I think it's going to drop around 12%. How did I come up with that figure? I shut my eyes and took a guess. I just think that our market is priced for absolute perfection. And even once good news starts to come out, markets can sell off on good news if it's anticipating it. So you really need to learn that. I think gold, silver, platinum are going to be the standout sectors of the market. Yes, we're getting back to guitar, bass and drums, but we're here to protect our money and hopefully make some. Bitcoin, look, it could rise, fall, go sideways, or it could even fly over Mount Dilligath. Good luck to that. I don't discourage my clients to trade in these currencies. I think there's probably around 10,000 of them now, and everyone is right, of course, just like the 6,000 odd religions. But I am a stock advisor. It's like back betting someone on the blackjack table or standing behind someone playing a card, telling them to go red or black. There is going to be a lot of money to be made in cryptocurrencies, but you've got to realise that it is going to be volatile, regulation, but a lot of these are controlled by a small minority. And there's lots of scams, in particular the Squid Game scam, where people thought they were buying into the Squid Game phenomena and the orchestrators took all their money and ran. So just be mindful. I don't have a problem with someone allocating a percentage of their portfolio, but I'd rather sit behind a blackjack table with no perfect pairs or anything in Vegas and have someone serve me Heineken all night. To me, that's my idea of gambling. The election, Labor are going to win. Again, the house prices were saved by Scott Morrison's miracle. I think the time's up. I don't like going into politics too heavily because it's not going to make you money in the end. The Sydney median house price, I'm going to go -12 to -15% this year. 3 years, it's going to drop 30% plus. and that still takes it to nosebleed levels. I think what I need to do is cop it completely on the chin that I have to pay the kook, and let's see if he'll open up another bet. I haven't been going too well at bets. I bet someone in my office that once the COVID smackdown started, that Westpac might touch $11. I think it got down to $13.29, and I was 1 or 2 nights away from winning that bet. But I guess I'd better stick to what I know. I think Melbourne is going to be in for a tough year as well, -8 to -12%. 3 years, -25 plus, and that still leaves it in extremely overvalued territory. This time isn't different. Cheap money has been on sale for far too long. People have been able to cook the books. They've been able to use imaginary equity. They've been able to read stories on news.com of the nuggets and filet fish guy at Blacktown McDonald's who owns 30 homes, and people idolise them. So, we're going to cop it. So I've seen these come and go over my time in the market, but it is going to get very ugly. Brisbane and Adelaide are probably a snooze fest, so maybe -5 to +5. Brisbaneites will say it's the Olympics and people moving to Queensland, but they're hard to call. Adelaide is probably due for a bit of upside. The house speculators went to Hobart instead. I'm not going to make any comments about Hobart because the market is far too liquid and it could really go anywhere. But I'm of the view that if you like to trade the market and your job is transferable, why the hell wouldn't anyone considering move to Perth? I just don't get it. I lived in Sydney for 28 years. I was a police officer for 8 of those. I got to know most of Sydney until we had all these new suburbs. I know where the good spots are. I lived in Bondi. I used to drive Military Road, Parramatta Road, all these arteries, tolls. I just don't get it. You've got, yes, it's a beautiful harbour. It's the most beautiful harbour on the planet. But should you pay $1 million for a kit build 60 kilometres from the city? I just think that people say, oh, you're ramping Perth. Well, I live within 10 Ks of beaches, the CBD, amazing shopping, cafes that sell coffee, bars, clubs, traffic. Traffic is bearable, and we've got this beautiful dry heat. So you look back to around 2006, and Perth was actually just as expensive as Sydney, but everyone will say, well, Perth isn't a desirable place. But I see Perth actually bucking the trend, going up between 5 and 12%, because I think that the money will have to go somewhere. When I was buying this house I'm in, I could feel the upside pressure. And I put in a bid, and then the vendor got back to me and said, well, I want another $9,000. And I thought, geez, what do I do? Do I look at another 50 houses, or I buy this house, which has, as Dennis Denuta would say, the vibe? And I really feel sorry for first home buyers in Sydney and Melbourne that are being priced out of the market, that have to go to mum and dad and say, look, I'll pay you back, which is pretty much a load of crap. They're stuck in European SUVs they can't get out of. Their afterpay accounts bursting at the seams. So I just think it's a tough world out there, and we've had it far too easy. And my other prediction is that I will never look like that photo on the right-hand side again. And this year, I will be even further gently basted with the ugly stick. So, I thought Fire Festival was the end of this influencer game. You had models out there swimming with pigs, and then suddenly the pigs are flying. I watched Don't Look Up a few days ago. It's you either get it or you don't. You are either going to love it or hate it. You might rate it a 1 or a 10, but I think that is the biggest piss take of modern society I have ever seen. And it's just weird that Americans can really take the piss out of themselves. Adam McKay is behind it. He was behind The Big Short. It is not going to be a classic like The Big Short, but if you watch Fire Festival and Don't Look Up, you'll see how ridiculous society has become. And now we've got finance people to follow on TikTok, Reddit. Well, from my viewpoint, it's taken me 23 years to learn about markets and society and psychology, and you just can't get on social media with a hot body and pretend to know about finance, crypto, and the stock market. And every fad has huge growth in these people. And I remember this way back to the dot-com bubble, where people became rock stars, minus the six-packs and bikini bodies. And I think this is going to die out. But then again, we might have another fad and the finfluencers might get involved again. But we're now having all these conferences, and suddenly we have a huge influx of experts, and it's going to end in tears. It always does. They come in, they say, well, look, Locantro, you're old school, you're a dinosaur. But my aim for my clients is to get them through the tough times and then have that lotto Powerball win. And I don't think people appreciate how much work goes into that. And I think it's good to accumulate wealth slowly, because then you've got a chance of keeping it. So anyway, what I've done is I do have come up with some quotes, but I've actually rejigged one of my quotes. And anyway, I'll let you all read that. I use tiptoe through the tulips quite a bit. But to me, that's how fragile markets have become. And it could be a couple in outer Western Sydney that need to sell their house, or another person close to them, and suddenly they start dropping the price 10 to 20% to get out. I know I've been through it as a seller, but at some point, when do you just put your hands up and give up? If you're going to panic first. And if you miss that last 5-10% of the madness, at least you're out. At least you have options to get on with your life, and you don't have to be a mortgage prisoner working your butt off to either go bankrupt or leave it for your kids that hate you anyway. So that's the quote. I can sum up the markets. I can sum up the property market. I can sum up all these buy now, pay later stocks. I'd never do it. If you haven't got the cash for it, don't. I know this has made billionaires. I know that Afterpay got down to about $8 during the COVID meltdown. But to me, stick to what you know, stick to solid companies. Yes, you're going to have some lean years. I'll probably have another year like I did last year, even though the opportunities were there for profits. Thank you.
Great, Tony. Thank you very much. You might want to come back, and I'll reduce your mini-me, get rid of that.
Yep.
There we go. Thank you, Tony. Great, great conversation. Congratulations. You pretty much filled up your bingo card. I thought you were going to miss out the date quote, but no, you came in with that right at the end. So congratulations.
Well, it's good. It's good to get through the third date, the penultimate date, and then suddenly she picks her teeth and grinds her teeth, and Yeah, that's just how fragile things are. And most women would say, my husband tinkers around and he doesn't pay me attention. So it's equal both ways. I know you've got a lot of female viewers, so I don't want to upset them.
Fair enough. No, and just about Don't Look Up. In fact, I watched that film the other day. It was excruciatingly true to life, in my view. That's what's so horrible about it. You know, with all of this sort of focus on, you know, the sort of the immediate short term, and you know, and not really these big issues. And to me, it was a very strong parable. And as you say, the people who made The Big Short also made Don't Look Up. I think it's a classic.
Yeah, and people will hate it. They'll say it's crap. But if you look at all the messages, you look at what the lines from Meryl Streep, Kate Blanchett, and even Jonah Hill, who's getting his act together, and you have to stay till the end of the credits. That's all I'll say.
Absolutely. As with all of these things, I've watched it all the way through, but no, there are some very important messages, and I'd say, folks, if you've not seen it, it is worth seeing. If you go there understanding that it's a parable, right, and then think about what it's really saying about the way that the media works, the way that politics works, the way that capitalism works and big business works and all of those things, and truth, it gets crucified in the process, doesn't it?
Yeah, but anyway, no, I was happy to put that up.
Great. Now, there was a question right at the start, which has dropped off the screen now, so I can't put it up, but it was about silver explorers, and the question was about some of the others like BML, IVR, SVL, MTH. What's your perspective about the other silver explorers, Tony? I mean, is there a sort of a chalk and cheese story here, or are they all in the same boat?
Oh, look, they're certainly different. We haven't, accumulated 10% of red metal for nothing. And, people need to realise that it is combined with a lead resource, but it's one that could be easily mined eventually once someone pays attention to it. But a lot of silver explorers will never become producers. So what happens in a fad or a bandwagon is that market analysts and those on TikTok will start valuing silver in the ground. So if you're looking for the silver trifecta, I would focus on SVL, Thompson. I don't know if they've had a name change, but TMZ, which is a bit of a name, and red metal. Those would be my three. Remembering that SVL has Bowdens, which has been around forever, which hopefully they don't mind, because why would you send yourself broke, potentially? But they'd be the three to focus on. But what always happens, guys, is that when a sector gets popular and some companies start to get a bit of attention, it turns into a me too. So you could have 5 silver companies that suddenly become 50. And those that become 50, a lot of them are just there to get a sugar hit and keep their directors in their Ferraris and Rottnest holidays.
Right. And what that says is that you can't just assume all of the stocks in that sector are all going to go the same way, right? You need to actually do a bit more work to understand what's driving them, because there will be some leaders, but also some laggards within the sector.
Well, that goes right back to .com. You see it in the 2005, 2006 uranium bubble, where Paladin went from under a cent to $10.52 and was one of the true survivors, but they managed to stuff it up. And you had a couple of takeovers, but a lot of those uranium companies went to ground. They went quiet, and then some of them even became biotech companies or milk companies or farm companies, or whatever is the hot fads. So stick to the genuine ones, stick to have the resources in the ground, then allocate a little bit of your money into the rubbish, just to keep things interesting. The rubbish will come.
Right, and you've always said, and I'll reiterate, this is a portfolio, right? So there are going to be some that hopefully will do really well, but there potentially will be a few that won't do really well, but that's why you have a portfolio.
Exactly, but I have a couple of stocks each year that I put clients in that don't meet my stringent quality tests, but they end up doing all right. So you have to keep your mind active, and you have to switch off the screen. Go take up golf or something, or go out in a boat, or even talk to your partner or your kids. You just don't want to be behind a screen refreshing it all day.
I recommend dog walking. I get my best ideas when I'm out with the dogs. And there was a question earlier on which somebody said, explain to me why your dogs are called Meteor and Luna. Well, I will just briefly do that, simply because people might be interested. We got these dogs off a farm down near Canberra. Luna was already called Luna, but the other dog was called Meatball. And we decided we couldn't possibly have a dog called Meatball, but we needed something that sounded quite close to Meatball. And so I suggested Meteor, which is close to Meatball, but also has that sort of link with Luna. So that's why we got Meteor and Luna. And Meteor runs a lot faster, so it sort of makes sense. That's how we got to where we got to. Moral of that story is, if you buy second-hand dogs, you'll have second-hand names.
I guess I've got another tip, Martin. Another tip.
Yeah,
go buy the dog pooey bags from Bunnings. It's a $9 investment for 200 of them, but geez, it saves your hands getting smeared in it, because these council ones just break up. So anyway, that's another hot tip.
I love it. I love it. No, that's a really good one, because you're right. Some of the council ones, it gets thinner and thinner and smaller, that you end up, as you say, in a rather gooey position at the end of the operation.
Oh, or you just don't pick it up. It's quite interesting how we love our dogs, and sadly I've got one here that's 10, and I'm starting to mourn him already. So life sucks sometimes, but
it certainly is. But dogs make it better generally, in my view. Now, I just wanted to put this one up, because this was a really interesting comment, and to me it goes to the heart of the problem. Right, this is somebody talking about, thinking that the banking system was perhaps going to fail, and there was a mention of bail-in and those sorts of things, and therefore silver bullion seemed to be a more secure option. Now, interesting question to you, Tony. When you think about silver, do you think of it like that, as a sort of a safety and security, or are you looking at as an investment along with other investment asset classes?
Wow, what a question that is. We haven't seen anywhere near a banking crisis here since the NAB nearly went under during the GFC. Maybe people should go back and read about what happened there and the crap we went through with the cheap rights issues. Look, I look at silver as something to really dollar cost average and to set your kids up with. I just think it will protect your purchasing power. I just think the gold-silver ratio is out of kilter. I just can't see any major currency shifts. I can't see cum rocket becoming something you buy a pizza with, or douche coin or douchebag coin. So I think that, it's really going to take a while to have things totally hit the fan and banks start to struggle, because we're going to have bailouts. People are always worried about bail-ins. So I'd rather focus on finding a good place to put your money. And to be honest, the best place for me to put my money for the last 2 years has been booking concert tickets, because I've got all my money back. And it's pretty much matched interest rates and slightly below inflation. But you need to build your portfolio like a rock group. You need the rhythm section, and that's where I include silver. I'd have a silver producer. I'd have silver explorers. And funnily, just after my dad said, get a real job, just before he sadly passed away, he actually told me that Bunker Hunt visited our farm in New Zealand, and Bunker was into racehorses. Again, look back at what happened with the Hunt brothers and trying to corner the silver market. But, I go back to boring things like coal and iron ore, and look at how much insane wealth that has created. So never say never. And I was looking at silver sub $5, and it was, sentiment was against it. Warren Buffett hated it. Kodak wasn't going to print out photos anymore. So to me, you look at silver and then investigate platinum. I'm not going to run through the investment options. I think viewers are wearing big boy pants. They can go look at that. But I don't think we're going to see any severe moves in replacing currencies and items of exchange, to be honest. But yes, certainly a great question. And it just probably reiterates that why go to this modern TikTok, worthless digital. A lot of it's worthless. I'm not saying Bitcoin is worth. It's going to be around for a long time as a trading counter. But again, stick to stuff that has over 5,000 years of proven history.
Yeah, absolutely. Well, there's some very interesting arguments about a Bitcoin and about the evolution of the finance system and all those things. I think it's too soon to say exactly how it's going to pan out. And as I quoted someone the other day who said, Bitcoin could go to zero, it could go to a million. Nobody knows, and that's that's the problem. So it is a speculative sort of positioning. Now, one of the questions which has come up a bit in the chat is the fact that the Fed is likely to lift interest rates. And you touched on this earlier on, but I also want to sort of unpack that slightly more. The leading estimates now are the Fed could start to put rates up in March this year, and perhaps 2 or 3 times through the year. Now, if that happens, that's going to put a very significant dent in the RBA's strategy here locally, and it could have quite an impact on the markets and indeed on the the performance of various sectors. What's your sort of baseline thinking here? Do you think the Fed will, or do you think the Fed will just do nothing until a lot later, and therefore that's not an issue that needs to be thought through?
I think what you need to do is dip your foot into the water. Let's just see what an increase in rates will do. I think that the complacent people in markets will be saying that rate rises are already factored in, which they're not. It only takes a slight dip in sentiment and all bets are off. So I just can't see how you cannot maintain prudent financial management of an economy without trying to bail out speculators. So to me, interest rates will go up. You can't keep it at these levels forever. I noticed that the 30-year mortgage in the US is now 3.27. That rate is rising. I don't think Australia cannot join in because we look at New Zealand and you look at the Auckland market. I mean, that's massively overheated, and rates there are at 0.75, and mortgages are going to go through 6% soon. So you just can't have a situation where the RBA is expected to manage a speculative bubble rather than the economy. So I think start lifting rates, do it slowly. Hopefully, we don't have to have a half a point increase, because that will really kill the market. But as that final quote, Martin, things are so precarious, and you can't have this level of, this isn't cruising altitude. Medium prices aren't going to stay here forever. First home buyers and investors looking for value are going to have another crack. So certainly let's watch what happens in the US. No one really takes New Zealand seriously, but I'm still giving the gold medal of house price collapses to Vancouver. Give the silver to Sydney, and Auckland can be in a close race for the bronze with Melbourne. But I know, this has dragged on. COVID and cheap money has dragged on. The speculative money, the bank of mum and dad, combined with the dumb money, is a very, very powerful weapon. But, as you can see in any speculative sector of the market, things will start to come off. And I actually don't think interest rates need to rise to be the pin. I think the pin is simply an exhaustion of buyers and less stories in the press of people buying assets that are worth, exorbitant levels And what I saw as potentially, oh, look, the bell, we've rung the bell over the years, but when Andy Lee paid $8 million for a house with no kitchen or toilet, was that one of the bells?
I think so.
I couldn't believe what I read.
Yeah. Well, there's been a few of those since. In fact, on that sort of same argument, Luke has asked this interesting question. What do you think of Mandra?
It's come off the bottom, hasn't it? It is starting to recover. I'll never forget John Adams driving through with his video recorder, recording all the houses for sale. If there's going to become a popular spot for retirees again, look, it might flatline. There might be a little bit of downside pressure. But to me, why would you go down there now when you can buy something within a 10-kilometre radius of everything you need in life for 5-6 times price to income, Martin? So, Mandra's getting there. Rockingham, that's where Mark McGowan lives. I went for a drive there a couple of months ago, and that area is starting to grow. But again, you've got the retirees, you've got mosquitoes, you've got crab festivals. Probably a nice place to live, but you don't buy there on this cycle to make money. I think it's more a lifestyle decision. And I think, in a booming market, even the ugliest area becomes desirable. And some of these real estate agents should be writing Mills and Boon novels because, how a sought-after location in the middle of whoop whoop, et cetera, I think the market will start to discount ocean views because who cares about looking at some blue? I even saw them trying to sell houses in the North Shore of Sydney, and they're saying that the house had views of Chatswood. I mean, for Christ's sakes. Anyway, but look, Mandra, nice-ish place to live. I like where I live. Probably the real downside of moving from Sydney to Perth has been giving up surfing. I miss the consistency of Sydney, but you either go down south and then you got to battle the sharks. But anyway, moving right along.
Very good, Tony. Now, there were a few people asking about Evergrande and, the Chinese connection. And it's interesting because yesterday Evergrande went into another trading halt because they had more issues with their creditors and things. When you're thinking about some of these stocks, do you cast an eye towards China, Evergrande, property sector in China, or do you sort of ring fence that as secondary relative to some of the other things you think about? Where does it fit into your universe?
It fits into it that there was some panic about it, then suddenly no one cares. But there will be an event in with that property sector that will trigger a change of sentiment, and people will start to change their tune because it's been largely ignored because everyone was scared of it. And then suddenly it could go whack. And I go back to COVID, Martin, in the early days where we were sweating on a couple of cases and the market got almost sliced in half. It just got smashed. So the worst thing we can do about that is be complacent. It's not going to stop me from sticking with the stock market. It just means over the next couple of weeks, I'm going to increase my defensive position just to protect the portfolio I've built. But, Chinese property and all those ghost towns, it's just dragged on for so long that people think, well, it can't go wrong anymore. And that's the mistake we're all making over a number of asset classes. So, it's certainly, it could get very ugly. And again, why should everyone that goes out and speculates get bailed out?
is, of course, the big question. That's the question for the Fed as well, because, of course, the markets are assuming that if things go wrong again, the Fed will just bail them out again, right? At some point, that whole bailout strategy has got to be questioned. And in China, what they're actually doing is saying, well, hang on a moment, we've got to find an alternative way. So maybe property sector won't get bailed out. And if that is actually where the trajectory takes us, that could have some significant consequences for commercial bonds, for example, in the US, as well as investors. Because, your point earlier on is that most of the financial markets are priced for perfection at the moment, when in fact we've got a lot of Barnaby swans right around the place. And somebody actually asked, sent me an SMS saying, why are you calling it Barnaby? Are you making a direct connection to a particular politician, or is that just a name plucked out of the air?
I just like the name Amber Heard gave a dog.
Okay, fair enough. And interestingly, we were talking on Twitter a little while ago about black swan events, and there are so many of them. You need a collective noun for a number of black swan events, because there could be a lot of them out there. Now, one of the things that we've touched on in the past is the sort of the social consequences of all the debt. And you mentioned buy now, pay later, and it's something which I've been very concerned about, because there are a lot of people who are up to their eyes in debt, and then they just now extend it further into buy now, pay later. And it seems that we have a particular philosophy at the moment that's driving a lot of people to get into huge amounts of debt on the expectation that they're never going to actually have to pay it off, right? The debt is always going to be there. They're going to cycle it forward in some way. They'll borrow here, then they'll borrow there, and this debt burden that we've actually burdened ourselves with seems to me, at least, to be one of the most critical risks that the economy faces at the moment. And from the sort of position not just of the debt itself, but of the burden on society that this represents. What's your perspective on this? And is the debt burden so big now that we can never unwind it?
Oh wow! I think that it has to be unwound. We need a reset. Society, the economy, the social situation cannot keep going. And I remember I used to spend a lot of money at Teracash, and then there was an Afterpay sticker on the back door of the change room. And I think the stock was a few bucks then. And it's just gone nuts. And then suddenly you have a lot of copycats, and banks are getting involved now. So I think a lot of old school people will say, well, what the hell is going on here? And now I haven't seen them as often now, but those My Pay Now ads with the girl with the handbag and the dog looking like Paris Hilton. And suddenly you can borrow your wage before you get paid it and pay 5%. But what is going to be the huge test for this sector is when before pay lists, I believe on the 17th of January, and it has Hartsner from Westpac is involved and a lot of big backers, and that's listing at $3.41. And their model is you borrow the money, you pay a 5% fee, then you pay them back once you get your wage. But there has been struggles getting their money back, and there has been some negative press. And I think this is going to be a huge test for the market. And for some of these stocks, it's like showing up at 3 a.m. At a piss up holding a vegan pizza. You're just too late, way too late. So.
Yeah, absolutely. And interestingly, my analysis of those who use buy now, pay later, it's biased towards perhaps younger households. A lot of first-time buyers are also, using buy now, pay later. They have multiple accounts, and then at least 20% of them miss payments and then have to pay significant penalties. So that's why the regulatory framework needs to change. But it's interesting that in Australia, of course, the Reserve Bank has not classified it as a credit product. They have in the UK, and in other countries too, but not here in Australia. So that's another example of where the regulatory framework in Australia is actually working against the interests of individuals and in favour of the corporate end of town and some of these new upstarts. That's another concern for me, because I don't know what you think, Tony, but we have become, I think, a society where we are continually just making payments again and again and again. I've called it before. You are a series of cash flows into the future, right? That's how the society is working at the moment. But that is not healthy, because it means we're actually paying more and more and more for longer and longer and longer, which means we've got less disposable income for other things. And whilst that allows large financial companies to get ever larger and make a significant return, it's a very debilitating situation, because a lot of people are actually effectively caught in this debt trap. And then, of course, we just mentioned interest rates going up. And to me, that's the real killer, right? With interest rates going up, with the amount of debt that's out there, actually, that's the thing that's ultimately going to create the mayhem. And when it goes, we've said, I think, for some long time it's going to go at some point. But when it goes, it could go quite quickly, because all of those forces are actually going to fall in at the same time. And then the other side of that is, and will the governments or the Reserve Bank then step in to try and save it, or will they let it fall? And that, for me, is the really interesting dilemma question that we should be thinking about.
Well, I think it's going to be the before pay test. I think is critical. If they floated 6 to 8 months ago, this thing would have doubled, tripled day one. Now, headwinds personified. I hope it goes okay. I don't want to see, this sector get slaughtered, at least until we have some time on the regulation. But, it's just like the old cash converters or pawn shops or you have these, what's it called? Wallet Wizard. Oh, geez, that guy annoys me. And we have these cash converter ads of, people like Christian Petrarca was on one. But in reality, I was sitting there once and someone walked in with a blender they picked up off a curbside and tried to get money for it. I think perception and reality are two different things, Martin. And the youth of today are far too in debt. They are listening to TikTok influencers, finfluencers, but hopefully this generation will knuckle down, and it's going to take an economic and social reset. And we've still got a long way to go. I say to some clients, look at these new housing estates. When you start to see the lawns and gardens unkept and plants dying, that's the time to start to panic. Once people start to become house proud, normally, once they start to lose that, watch out. And I think, we've had a cycle of mental health issues throughout, where family lawyers must be rubbing their hands now that once things open up, all these divorces and stuff, and then, once supply chains open up on cars, you'll start to see used car prices finally fall. So we've got a lot of unwinding to go. And if you look at bailing out, what about those people that bought a house in Perth 16 years ago, near the top of the market, that are still underwater and have paid a heap of interest that haven't gotten anywhere? So why should other speculators be bailed out?
Yeah, well, that's a great question. Sometimes the answer is the people who get bailed out are the people who can make enough fuss and have enough political influence to get bailed out, whereas the small guys are the ones that just get taken to the cleaners and there's no support and help. And it's, we've created this unequal society where you've got a small proportion of the society doing really, really well, even more so in the US, but the large proportion of society actually really struggling and with very little in the way of free cash and assets, high amounts of debt, no wage rises, cost of living rising. And what I don't get is that if you look at it in proportion of the numbers of people, right, there are more in that second bucket than in the first bucket. But you wouldn't believe that to be true based on all the things you see politicians say and based on all the things in the mainstream. It's almost as if 80% of the population base is irrelevant and everybody wants to sort of aspire to that 20% lifestyle, make money on property, etc., etc. It goes right back to that don't look up thing, right? Where effectively we are living in this sort of, mirrory world where in fact reality is a long way from what people perceive reality to be, which is a real worry.
Yeah, there's a couple of things. I look back after .com, parties, dinners, lunches, fast cars. I was earning my yearly police wage in a month. Then suddenly the spec market died, and it took about 4.5, 5 years before the next fad emerged. So I know we've got a lot of pent-up influencers, bikini models, OnlyFans people that will have to get watered down. But that will happen because there is always a reset event that sends markets and investing back to some kind of normal. And heaven help us if the RBA cash rate gets anywhere near its long-term average, which I'll say it and cop crap in the comments, it's around 6% long-term. And the history of Australian mortgage rates, long-term is over 9%. And we've got people now locking in 1.99 to 3. And people say, well, this time is different. Look at the world. Well, who would have thought that we'd have a global pandemic and 47,000 cases of COVID in Australia per day? So, and then I go back to the early 90s where I could get 17% in a term deposit. What about the genuine savers out there who have been absolutely slaughtered, that have been forced to take risks, are worried about their superannuation, and it's the genuine investors that seem to have suffered at the hands of speculators. But we all can create our own paths. We can all get educated, But one of the biggest mantras I live by is don't get addicted to crap assets. Once you do that, it's hard to turn around. I've just got a cough, Martin. So that's what you need to live by. And, you don't need designer clothes. A good, you could have the most designer handbags and clothes on someone and they're still unattractive. You need to just focus on stuff that fits. Focus on being able to afford your shopping, being able to fill your car up with 95, if there's any benefit in that. I just think the next round of rich people are going to be those that are debt-free and can move wherever they want and are not bound by, locations. I followed Pearl Jam around in 2010, and on the front page of the Dublin newspapers were school teachers stuck in negative equity and they couldn't move. And I still think all these headlines are going to come, even though this thing's gone on a lot longer due to living behind COVID, having all this government support and having money at virtually free.
Yeah, and it's interesting, the concept of being debt-free, right, which is just worth pausing, right, is something which a lot of people would say, oh, don't be stupid, there's no way you can do that, because basically society is now wedded to significant amounts of debt, and the assumption is you will always be in debt, and then you're sold the dream and you're, marketed more stuff to, and so you want to buy more and more and more. The problem is that debt ultimately has to be repaid one way or the other. Now, whether it actually is repaid, when you quit this mortal coil, or whether you actually pay it off before, but you've got to repay debt, and you are effectively not your own agent if you have debt, right? Because you always owe it. And I want to remind people that it is often the case that the pain of debt is not understood until you can't actually make those repayments, right? And I see that in my surveys, 42% of households in financial flow problem at the moment, trying to manage all of this debt that they've got, right? And yet they're still being sold the debt dream, right? They're still being told this is the way that you actually make more money, et cetera, et cetera. It shows you the fragility of the way that our society has gone and the critical overhang that debt's created. And the concept of actually deliberately trying to get debt-free and staying debt-free is something which I think people need to spend more time thinking about, you know. And my own view is, sure, there are times in your life when getting a mortgage, etc., it makes perfect sense. But don't swallow that philosophy for the whole of your life. Don't assume that debt is the normal state of being. Debt, to my mind, is a temporary state that you have to get through to get somewhere. But you should be building a way out quickly, because once you have no debt, you're much more safe, much more secure, and much less exposed.
Yeah, and it all gets back to, you know, what sparks real joy in our lives. And I know we focus on a lot of figures, but for me, you know, it's the simple things. And I work hard. I've done okay over the years. You know, I've struggled as a police officer, you know, living pay to pay. Admittedly, I could walk to Bondi Beach and surf all day if I wanted to. But, you know, you really got to look at, you know, everything. You know, we're told, get a mortgage, have 3 kids. This movie kind of sucked. But if you go see The Lost Daughter, I think it's on Netflix or Stan at the moment, that is the most realistic movie I've seen on parenting at all. You know, it's just amazing how those kids just nagged that poor woman to death. And you've got to think about your decisions about having kids as well. How much can you afford to? What are you going to do with your life? How are you going to treat it? Because I just think that sometimes going against the grain is going to be of greater benefit. And I know when my kids were growing up, I mean, I couldn't pinch half an hour to read the bloody newspaper, but it all gets very expensive. You know, we still haven't had the mass pullouts of private schools yet. That's all to come. It's just a lot going on. And, you know, if I had my time again, I would have thought more about it. But, you know, no regrets with the path I've had. But, you know, you look at where people are placed at the moment. You look at these new estates, yeah, they all look good, but every house looks good. How you differentiate that? How do you get yourself, you know, out of trouble? You know, I go on the 3S principle, Martin: steak, Shiraz, and sex. That's what gives me the most joy in my life. And, you know, I know Australians don't like talking about stuff like that, but my partner is from Hungary and she'll talk about anything.
Tony, I think that's a great place to finish the show tonight. Folks, there's more to life than debt, right? Yeah. And the point there is that there are decisions that people can take, right? But you've got to actually understand how things are actually positioned and how people are encouraged to do certain things. But, you know, sometimes going against the flow and asking some harder questions is really important. And Tony, what you do so well is you just call it as it is, right? And so once again, you've filled up your bingo card. Thank you so much for that. Thank you very much for those thoughts in terms of the stocks. And, you know, as we said right at the start, not financial advice, just a general conversation, but some useful things there. And I think the points that we've made towards the end here about the fact that there are decisions that people can take that could actually take them into a different path if they did but see it is a really important one.
Yeah. Yeah, no, absolute pleasure being here. And I hope people go away with some value, even if that's don't look up and Bunnings dog poo bags.
Well, I do say don't look up is definitely worth looking. And I'm going to check out the poo bags. Tony, thank you very much. Really appreciate your time tonight. Thank you very much. Have a good 2022, and I'm sure we'll do this again a bit down the track.
Yeah, look forward to it, Martin. And thanks, viewers, for all the support. And let's all stick together and, yeah, enjoy life.
Absolutely. Enjoy life is a good thing. I'm going to take you offline now, Tony. See you later. Thank you. Bye-bye. Well, there you go. I hope that you found that useful. I always enjoy speaking with Tony. He just calls it as it is. And, you know, there are some really, really important messages in there. Well, we're at the end of another show. Just to tell you that next week I will be talking about household stress and scenarios. I'll update the data to the end of the year. And I'll also try and answer some of the other questions. I've got a load of questions from earlier shows that I haven't been able to get to. So I'm going to be talking about things like bail-in, for example, and some of those issues as well. So you can join me same time next week. There'll obviously be daily shows going up on DFA as well. And so I want to say thank you very much for spending some time with me this evening and with Tony. Have a good evening. Have a very, very good 2022. And I look forward to catching up with you on the next show, be it a live show, albeit one of the recorded shows. This is Martin North from Digital Finance Analytics signing off. We'll see you next time. Good night.